We bring you the latest breaking updates, insider analysis, and verified news on the Iraqi Dinar, the Vietnamese dong, global currency events that are shaping financial history. Today, we're covering a headline that has sent shockwaves through the currency investment community. The confirmation that the long-awaited Iraqi 30 notes are now eligible for exchange at local U.S. bank branches. This marks a monumental shift, as the notes that many have held on to for years, the 25,000, 50,000, even 100,000 IQ bills, are reportedly moving toward legitimacy within the American banking system. The call to action for those who have been waiting is immediate. This isn't a time to wait for rumors or speculation. It's about recognizing the unfolding opportunity and understanding the necessary steps to be ready before this window of opportunity closes. The information we're about to share may be one of the most significant financial updates of your lifetime. Reports from sources, including the Iraqi Gazette and various U.S. banking insiders, have triggered a significant reaction in global financial circles. Large denomination 30 notes are reportedly no longer being viewed merely as collector's items, but as legitimate instruments for exchange. This represents a fundamental change in how these notes are being recognized by international financial institutions. Years, there was widespread skepticism surrounding these large denomination notes. Many investors and analysts debated whether they would ever hold significant value outside of small speculative forums. It was widely believed that these notes would eventually be phased out or devalued as part of Iraq's monetary reform efforts. Yet, the latest information suggests a very different outcome. Mainstream U.S. banks, not just a select few elite financial hubs or specialized centers, reportedly preparing to accept these notes directly. This change means that everyday holders of Iraqi Dinar may finally have a direct path to liquidity within their own communities. Significance of this development cannot be overstated. It signals a potential end to years of uncertainty and positions the currency as a viable financial asset rather than just a speculative novelty for those who have patiently held onto their dinar through endless rumors, false alarms, and constant delays. This turning point offers a sense of vindication. The conversation is reportedly shifting from whether this would happen to when it will happen. Those who maintain their conviction may be nearing the payoff stage of a long and challenging journey. To truly grasp why this is so important, we must revisit the historical context. In 2003 and 2004, as Iraq was emerging from conflict and political turmoil, it introduced these large denomination notes. At that time, the country was dealing with severe inflation, a fragile economy, and a general lack of confidence in its currency. The Central Bank of Iraq needed a way to stabilize internal transactions and enable large value exchanges to take place within a broken marketplace. This led to the creation of the 25,000 and later the 50,000 and 100,000 dinar notes. However, very existence was controversial, with critics arguing that such large denominations were a sign of economic weakness. For nearly 2 decades, critics have questioned if these notes would ever be integrated into the global financial system or if they would simply be eliminated during future reforms. Now, as we fast forward, the situation in Iraq is very different. The country's oil exports have stabilized, government revenues have increased, framework for more disciplined fiscal management has been established under international oversight. The narrative of impossibility is reportedly giving way to plausibility. While some skeptics continue to dismiss revaluation stories as far-fetched, history offers precedents that provide context. History has shown that dramatic turnarounds for currencies are possible. After the Gulf War, the Kuwaiti dinar was restored to a much higher value, even after being considered worthless during the occupation. In the aftermath of World War II, the German mark underwent multiple restructuring phases before it was able to regain its international standing. These examples show that while rare, such dramatic transformations are entirely within the realm of possibility, key takeaway is that currencies once written off as worthless have in certain historic cases transformed fortunes for those holding them. For those who hold Iraqi dinar today, historical precedence suggests they may be standing at the brink of such a transformation. The most critical element in this developing story is the reported role of U.S. banks. For years, there has been widespread speculation within investor circles about which financial institutions might participate in a potential dinar exchange. Recent reports are pointing directly to major mainstream institutions such as Wells Fargo, Chase, Bank of America, HSBC branches, reportedly preparing to facilitate these transactions. What is particularly noteworthy is that this activity seems to be extending beyond specialized redemption centers and into everyday local branches, making the process more accessible and transparent for a broader range of people. This move aligns with what many have referred to as the Tier 4B exchange rollout plan, a structured sequence where average holders are finally included after years of waiting. However, with this opportunity comes a responsibility to be prepared. Reports indicate that these banks will not be engaging in a casual or informal process. They are expected to operate under strict compliance and regulatory frameworks. Participants in any potential exchange would need to present verifiable identification, undergo Know Your Customer KYC checks, and receive approvals from designated bank officials. This ensures not only the legality of transactions, but also their alignment with anti-money laundering protocols. In short, professionalism will be essential. Investors should not assume they can simply walk in with a stack of notes and expect immediate results. Preparation, from having the right documentation to maintaining a professional demeanor, will be crucial. The message is clear. While the doors may be opening, those who enter must be ready to meet institutional standards. As this moment unfolds, discipline and readiness could be the difference between a smooth transaction and a frustrating delay. It is important for holders to not show up unprepared, as banks will reportedly expect a high level of professionalism. A former U.S. Treasury consultant who understands the technicalities of currency flows and the political pressures that surround them has reportedly weighed in. He believes that the recognition of Iraq's 30 notes as valid exchange instruments is more than just a goodwill gesture. It points to an orchestrated readiness for controlled liquidity injections into the global economy. For decades, the U.S. Treasury, the Federal Reserve have carefully watched the ripple effects that sudden currency reevaluations can have on bond markets, foreign reserves, even regional trade flows. This consultant's view is that the cautious, measured rollout being observed where local U.S. banks are gradually being introduced in the process suggests that policymakers are prioritizing stability. The fact that these notes are reportedly not being invalidated or reduced, instead absorbed into a broader liquidity plan aligned with historical examples of controlled financial reintegration. The consultant emphasizes that the key phrase is controlled liquidity. This means that the U.S. government and Iraq's central bank have no interest in creating financial chaos or a speculative bubble. Instead, They reportedly aim to manage the revaluation in a way that bolsters both Iraq's credibility and international confidence in the interaction between the US dollar and the Iraqi dinar. This analysis highlights the seriousness of this policy pivot, framing it not as a matter of hype, as a carefully managed financial engineering project designed to minimize shocks and maximize stability from the Iraqi perspective. Seasoned financial analyst based in Baghdad offers a complementary viewpoint. His argument centers on the importance of reputation and international standing for Iraq. Nearly 2 decades, Iraq has operated in the shadows of global financial systems, viewed with suspicion by investors who feared corruption, instability, sudden policy reversals. By reportedly honoring the 30 notes at their face value, the Central Bank of Iraq is said to be sending a clear message to the world that it is committed to building credibility. The analyst stresses that credibility is the foundation of modern finance, without which foreign direct investment withers and trade deals falter. He points to Iraq's gradual reforms under international guidance, the stabilization of oil revenues, and the introduction of anti-corruption measures as evidence that the country is seeking long-term legitimacy. In his view, the honoring of these large denomination notes is a symbolic gesture demonstrating that Iraq is not abandoning its citizens or foreign holders, instead standing by its financial obligations. Such a move is believed to strengthen confidence in Iraqi policy and set the stage for its deeper integration into global markets. The analyst frames this as a pivotal moment in Iraq's financial history, a chance to transition from a reputation of skepticism to one of credibility on the world stage. Meanwhile, from within the U.S. banking industry, an insider at Chase Bank has reportedly provided a perspective that connects high-level policy with everyday practice. According to this source, internal memos circulated within the institution confirm that teller staff and branch managers are undergoing specific training sessions related to exotic currency exchanges, including the Iraqi dinar. For years, many currency holders were told by local banks that they would not handle IQD, which often pushed them toward gray market dealers or online platforms. The fact that Chase, one of the largest banking institutions in the United States, is now actively training its employees on protocols for handling these transactions marks a significant shift. The training sessions reportedly include detailed information on know your customer, KYC procedures, required documentation, fraud prevention techniques, and how to escalate cases that require higher level approval. This level of preparation suggests not only that the banks are anticipating significant volume, also that they are positioning themselves to handle it in a responsible and efficient manner. The insider emphasizes that such measures are not taken lightly by a major bank. No institution would allocate time, money, staff to prepare for something that is not operationally imminent. For IQD holders, this insider information may serve as confirmation that the infrastructure for potential exchanges is not a hypothetical concept, is actively being built into the banking system today. At this juncture, it is vital to speak directly to the audience that has held on to this vision for years, especially those in the 65 plus age demographic who have often formed the core of the IQD investment communities. You have faced cycles of skepticism, endured ridicule from some financial experts, and weathered the disappointment of false starts. Yet you have remained steadfast. Many were told that holding Iraqi dinar was nothing more than a fool's errand, a gamble that would never pay off. Today, with reports that banks are opening their doors and treating these same notes not as curiosities, but as real financial instruments. Patience is reportedly being vindicated. Now, the next phase reportedly demands wisdom and careful consideration. This is not the time to rush blindly into decisions driven by excitement or fear. The opportunities that may be before you are real, so are the responsibilities that come with them. It is important to think carefully about what you want from this experience. Security, stability, lasting legacy. For those over 65, this may be more than just a currency exchange. It could be an opportunity to secure a financial future for yourselves and your families. Patience has brought you this far. It is patience and prudence that will serve you well in the coming steps. It is important to educate yourselves, verify all information, seek guidance from trustworthy sources rather than relying on unverified rumors. In this moment, it is essential to take a moment and focus on practical steps. First, it is reportedly wise to gather all your necessary documentation. And banks will likely require official forms of identification, such as a driver's license or passport as proof of address, like utility bills or bank statements. If you have any receipts from your original currency purchases, bringing them may be helpful as they could strengthen your credibility and demonstrate the legitimate acquisition of your holdings. Second, it may not be prudent to simply walk into a bank branch unannounced with high expectations. It is reportedly better to call ahead and discreetly confirm whether that specific location is prepared to handle Iraqi dinar exchanges, since the readiness of banks may vary. Verifying in advance could save you time and frustration. Third, it is important to be aware of the possibility of non-disclosure agreements. UND, as some reports suggest, that certain contract rates, which might be higher than standard market offers, may require participants to sign NDAs. If you are offered such an option, it is recommended to read the terms carefully and consider seeking legal counsel if necessary to make an informed decision before you sign anything. It is reportedly important to know your numbers. While rate projections circulating online from 3 to 6 per IQD remain speculative, it is helpful to familiarize yourself with what these potential numbers would mean for your personal holdings so you are not caught off guard during discussions. Fifth, it is wise to decide in advance whether you would prefer a lump sum payout or a structured, staggered exchange. Each path has different potential tax, security, planning implications. Finally, prioritizing financial planning is of utmost importance. It is crucial to speak with licensed financial advisors, certified financial planners, accountants, or tax attorneys rather than relying on information from hype-driven channels or unverified online forums. Potential exchange of this nature should be treated with the respect, diligence, and foresight it deserves. Before we conclude, it is critical to offer a strong reminder. This information is for informational and educational purposes only and does not constitute financial advice. While the developments surrounding the Iraqi dinar are generating a lot of excitement, they also create fertile ground for misinformation, opportunism, and outright scams. Countless individuals have reportedly fallen victim to fraudulent brokers, unregulated platforms, self-proclaimed currency gurus who promise special access or privileged rates in exchange for upfront fees. It is important for every viewer to recognize that no legitimate bank or financial institution will ever demand an advance payment or activation fee for a currency exchange. The only reportedly safe path forward is through official banks and verified exchange centers that are licensed and regulated. If anyone pressures you to act urgently, discourages you from verifying their credentials, or asks you to transfer money before an exchange takes place, consider it a significant red flag. You should not be swayed by promises of secret rates, insider contracts, or hidden opportunities that seem too good to be true. Protecting yourself and your financial future requires dealing only with professional institutions that are bound by compliance laws beyond the individual stories of investors. Potential revaluation of the Iraqi dinar has broader implications that could reshape economic landscapes, both regionally and globally. From the perspective of U.S.-Iraq relations, a strengthened, internationally credible dinar would not only validate years of political and financial investment, could also deepen economic ties, particularly in trade and energy, as Iraq's oil revenues stabilize under a stronger currency framework. Its leverage in international discussions and bilateral deals with major countries could grow. Credible dinar could also make Iraq a safer and more attractive market for U.S. companies regionally. Valued IQD could contribute to Middle Eastern stability by signaling that post-conflict economies can successfully recover and re-enter the global system with legitimacy. This development might inspire confidence in neighboring countries navigating their own economic reforms and could recalibrate Iraq's standing within its own regional alliances. Global scale, dinar's trajectory has often been discussed alongside the Vietnamese dong and the Zimbabwean dollar in what enthusiasts refer to as the global currency reset narrative. Regardless of whether such a full reset materializes, the dinar's trajectory holds symbolic weight for its holders. Whether you own a 100 Zalozan dinar or a million, participating in something that is reportedly larger than yourself, this is a movement that reflects resilience, patience, possibility of rewriting financial history. It is more than just an exchange. It is a symbol of how geopolitics and personal persistence can intersect to create generational change. At the heart of this entire story are not just charts and policies, real people who have held on to their conviction despite the ridicule. Consider the story of a retired veteran who first encountered the Iraqi dinar in 2004 while serving overseas. Believing in the possibility of Iraq's recovery, he brought back notes and quietly stored them away. Over the years, friends mocked his decision. Some financial advisors dismissed it, and even family members urged him to sell and move on. Yet, he held on, not out of stubbornness, but out of the conviction that one day Iraq would find its footings he held would mean something. For nearly 2 decades, his story was one of waiting and believing against the odds. As reports now surface that major U.S. banks are preparing to exchange the very notes he carried, his patience is being vindicated. Stories like his are being repeated across communities of retirees, grandparents, veterans, and everyday believers who never gave up hope. For them, this is not just about money. It is about the restoration of faith and the justice of their long journey. The Iraqi dinar is not just a piece of paper. It has become a symbol of endurance, courage, and believing in a better future even when others could not see it. To every holder listening now, this moment serve as a powerful reminder that your journey has not been in vain. The Iraqi 30 notes are reportedly being positioned for exchange at U.S. banks. The years of uncertainty, rumors, and doubts are giving way to preparation and progress. It is time to prepare, plan, and act wisely. The opportunity is reportedly opening. Success will depend on how carefully you approach it. Remember to stay patient, stay wise, and stay hopeful. The doors may be opening and history is reportedly calling.